Hi traders, in today's video I'm going to talk to you a bit about finding your feet in trading, and the one thing which for me certainly made such a difference to my consistency, to my profits and to my general enjoyment of trading. Before this point in time my trading was just up and down, up and down, up and down and break even, which to be honest is pretty good nevertheless, but there were long periods of losses, which takes a mental toll, is very frustrating, and in some cases can completely discourage you to the point where you actually stop trading. And that's a shame, because you might actually find that you're a really good trader, but you've just got the wrong system, got the wrong strategy, the wrong mindset, or you're just not looking in the right areas. So in this video, what I want to do is talk you through how I arrived at the way I trade today and why I found it difficult to reach that point. The first thing I should make clear is that the intention of this video isn't to make you want to trade the way that I trade. Just because it works for me doesn't mean that it will work for you. There are hundreds of thousands of ways to trade the markets, and none of them are right, in inverted commas. It's got to work for you and you've got to be comfortable with it. So what have I tried in the past? Well, my introduction to trading actually came in the form of the Forex markets, and it was very much technical analysis. I was using moving averages, trend lines, and what else? Moving averages and trend lines. I think that was potentially all I was using, and levels of support and resistance, but they are in essence trend lines. So when I talk about levels of support and resistance, I'm just talking about levels of supply and demand, areas where the price, the charts seem to gather in one area, and it will move off that quite consistently. Trend lines simply plot in a neat line the pathway of the markets, so you can connect all of the lows or all of the highs if it's going down, and it gives you a reliable area against which to trade. I'll go into that in a lot more detail in another video, but that's what trend lines are. That's what lines of support and resistance mean. In terms of moving averages, it's pretty self-explanatory. They are squiggly moving lines which plot the average of the last X number of candles on a chart. So a candle could refer to a minute, an hour, a day, a week, a month. Often you'll look at a chart and people are trading like the 1 hour chart, and so if you've got the 200 hour moving average on it, it is simply plotting the average point of the last rolling 200 hours and giving you a smooth line to follow, and that can be useful for so many different reasons, but they are just basic technical indicators which I think most people will probably end up starting with because they're just documented the most. And I learnt how to place my first few trades using the book Attacking Currency Trends by Greg Michalowski. In fact, I'm just going to get it for you. This one here, Attacking the Currency Trends by Greg Michalowski. I still watch his videos on X and occasionally on YouTube. A really good analyst, really nice guy, into golf, so my kind of guy. And I've got loads of notes in here still from back in the old days. I should probably revisit those and have a look at some point. But it's a really good book if you're looking to start trading. It's got lots of charts and diagrams in it. Whoops, all my notes falling out. But yeah, this gave me my first introduction into technical trading, and it was in the Forex markets. That actually is closer now to how I trade today than anything else that I tried thereafter. But obviously at the beginning of my trading journey I was wanting to try everything out there, so I then read a book called The Complete Turtle Trader, and unfortunately I don't have that to grab for you because I've just lent it to one of my friends. But this by Michael Covell, this book really made me fall in love with trading in like a real deep way, like head over heels. So if you've not heard of the turtle trading story, it's about Richard Dennis and William Urquhart, and they perform a trading experiment where they bet with one another, a lot like the film Trading Places, if you've ever seen that. It's a pretty cheesy film, but a pretty great film. My wife would disagree. She thinks it's awful, but I love it. They have a bet, essentially, that Richard Dennis can't get a group of complete novice people with just an interest in the markets to become highly successful, wealthy traders. And so he puts an advertisement in I think it's the Wall Street Journal, and starts interviewing for people to come and join this experiment. They become what he calls the turtle traders, and he essentially introduces them to what is now known as trend following. And when I talk about trend following, it doesn't just mean short-term following the trend sort of trades. We're talking about following longer-term trades, covering certainly 20 plus markets. So they'll be trading the currencies, they'll be trading some stocks, they'll be trading lots of commodities, and that's broken down into metals, agricultural things like orange juice, live cattle, like everything you can think of. The more markets they can get their hands on that are liquid, the better. And they were using essentially a breakout system to just trend follow all of these different markets. I'll certainly do a video on that in the future, but long story short, these traders became incredibly successful and have their own hedge funds today. So it's a really interesting story to follow. If you want a good read or even listen to it on Audible, very good listen too. I've certainly spent a lot of hours floating around in a pool listening to that on my AirPods. So I then began looking into trend following, and I listened to the Systematic Traders Unplugged podcast with Niels Karstrup Larsen, Jerry Parker, Richard Brennan, and they taught me so much about the technical side behind it. What I really loved about trend following is that you didn't need to know all of the fundamentals. You didn't need to be tuned into macroeconomics and global macro strategy, or be able to read the Financial Times or understand what the commentators are saying on Bloomberg. It was all pure technical analysis. It was long and short, without any discretion at all, completely 100% systematic. And for me, it was perfect for me, because I didn't have to have that financial background, that education to fall back on, or to enable me to start off trading. So I created automated systems to do this. I started off using Pro Real Time in Pro Real Code. I had a bash at making my own. I asked a few people to help me out changing the code. I paid people to do some systems, and I came across some really profitable systems, sometimes I have to say by mistake, and I really didn't understand how thoroughly you need to backtest these things, these automated systems. I kind of shudder when I think now, and I look back on it now, and I think, crikey, I was splashing around in the real markets with these systems, which I really had just over-optimized and tested on such a closed sample. Really, you need to be testing it super thoroughly, really stress testing it. And there's a really, really good book about backtesting, which I think is this one, Following the Trend, by Andreas Klenau. This has a good trend following system in it and talks a lot about backtesting. One thing that I came to realize about trend following is that you need to have probably £1 million of equity in order to do this profitably. You need to probably be able to trade at least 30 markets, some of them quite expensive markets to trade. You need to really understand standard deviation and risk. And I ended up having even though I knew about trend following in such a deep, profound way, my experience was a really bad one when it came to trading in the real markets, because I happened to hit a 2-year very choppy flat stretch, and that was not good for a trend following system. And I should have been scaled way back on my sizing. And so throughout that whole period, I had to do a lot of learning, a lot of soul searching, a lot of revisiting books, really trying to understand where I'd gone wrong. It was a pretty sort of pivotal moment for me, because although I didn't blow up my account, I had a 50, just under 55% drawdown. But I'd done everything right. I'd stuck to my system. And so, that was tough. I'd put probably, I would say, 6 years into that. So pretty tough one to swallow that. And then I started to look at shorter term trading. I looked at the complete opposite of trend following, which was mean reversion trading, which is essentially looking to bet against, well, it's not always the case that you're sort of trading against the trend. Sometimes you're just doing shorter term trades in the direction of the trend. But I was just looking in a general sense of how to swing trade mean reversion. So if price moved away from that moving average, I would be looking to trade at a certain point for it to return to that average, and again, if it goes above it, to return back down to that average. Again, I created systems which seemed to work really well in back testing, but didn't translate quite so well into the live markets. And again, much like with trend following, it has its downsides. If you find yourself in a heavily, strongly trending market, you can, go on a huge downswing, especially if you're doing shorter term trades on a sort of intraday level. So at this point, I'd looked at swing trading over several days and weeks. I'd looked at trend following, where you're trading the daily charts, and I've looked at automated trading, both short term, intraday, scalping, long term. I'd read books by Robbie Burns, the Naked Trader, about how to invest in stocks in your ISA, very much long term value investing. I've read I really have explored just about every indicator and system that there's been published. And ultimately, I just kept coming back to the thing that always worked for me and that I understood best. And it was the very first thing I learned, which was technical analysis of the price, looking at the price. It's frustrating that that's where I ended back at, but nevertheless, I did, and it's worked very well for me ever since. Yes, I don't trade exactly the same way that Greg Michalowski teaches in his book. I did find my own ways. I've actually found my own ways using a combination of mentors. So one would have been Greg, and the other would be Charlie Burton, who is quite prolific on YouTube these days, and he has his own trading community, Charlie Burton Trading. He's won lots of competitive trading awards. He is a qualified wealth manager, and he's the real deal. He's got his own very good sort of foundational course and masterclass, where he basically teaches you all about how he trades and why he trades like that. And in his community, he's got professional traders in there, all giving their sort of wisdom and advice, and giving you just exposure to what it's like to really plan out a trade and execute that trade, and what you need to be talking about, what you need to be focusing on, and what you don't need to be focusing on, which is really important because there's so much rubbish out there. I can't even tell you. I now have settled on what I like to do. I like to follow technical analysis only, pretty much, and I use the price. I use MACD. I use a couple of moving averages, and I've got a few different ways to get into a trade, a few different ways to get out of a trade, and yeah, that's it. I do use some automation in my trading. I'm always tinkering around with how I can make automated trading systems which replicate my discretionary way of trading. Obviously that's very hard, but with the advancements in technology and more flexible coding languages, it certainly is possible. So I'm trying to get that as close as I can. But for me, the one thing that really changed my trading was just realizing that actually technical swing trading is the thing that works for me. It fits in with my day-to-day life. I can run my business without having to constantly be monitoring the charts. It's enough trading that I feel like I am connected to the markets moving. I don't feel completely disconnected, checking in, sort of once a week or once a month, as some investors might do. Allows me to use I think I've developed quite a good skill for reading charts over the years, and so it allows me to sort of flex that a bit and find an edge in the markets. And I just think that I like to be able to take long and short positions. I like to be able to trade commodities, indices, stocks, forex, the lot. So for me, that was the thing that it just feels right now. I don't have any questions. I've stopped looking. I don't care about anyone else's system. It's not that I'm not interested. I am, and I love looking at other people's systems and how they're doing, but finding that confidence to just know, right, I'm now in the right headspace. This is my system. I've traded it enough. I've traded it through thick and thin, good markets, bad markets, surprise markets. I know where it's good. I know where it's bad. I know how much to risk. I know when I'm going to add into my position. All of these things that you experience over time through, sometimes the hard way. You almost need that. So yes, I've been trading for 14, 15 years now, and really I probably could have found this point in time after maybe 3 or 4 years. I think it was almost necessary for me to experience that 55% drawdown, to experience the constant having to bash my head against a wall where day trading wasn't working for me as much as I wanted it to. I really wanted that trader lifestyle, to be in front of my screen all the time, constantly trading. It's very hard to be a profitable day trader. I'm not saying it's impossible, but it's very hard. So it's just that finding that point of comfort and point of peace where you completely understand that you've found the system that is going to make you money in the markets. So what would my tips be for narrowing down your search for the right strategy, the right system to help you find your feet with trading? Well, you need to consider, firstly, how much time you've got. If you can't sit there all day in front of your screen, then don't try day trading. Intraday trading is not going to work for you. You have to be able to be there all day. But also just know that intraday trading is just so much harder, and the odds are stacked against you. You're up against all of these high frequency trading algorithms. It means that you've got to have a much deeper understanding of volatility, and you've got to be able to stomach a lot more swinginess in terms of your equity curve, because the markets chop up and down a lot, and if you're a new trader, it's unlikely that you're going to be equipped for that, certainly for a few years. So I would probably encourage you to more towards swing trading or longer term investing. Secondly, after you've decided what sort of time frame you want to be trading, you need to decide what instrument you're going to use. So an instrument would be like a spread bet, a CFD, a futures contract, options contracts. The most common one is CFDs, contracts for difference. And this is probably where I would recommend starting if you're a beginner. If you're in the UK, then there's nothing wrong with looking at spread bets, but just be aware that they are higher leverage, and typically you want to start with much lower leverage. I'm talking a max of 30 something, like 33 to 1. But I would probably start off with CFDs in the Forex market, low leverage, risking 0.1% of your account equity. And then in terms of the markets that you trade, you've got commodities, metals and agriculturals, energies like oil and gas. You've got Forex, obviously. This is the most liquid market. Literally trillions of dollars go through the Forex market every day. And the advantage of a highly liquid market is that you're never going to struggle getting in and out of it. And you get smoother market movements. So a good starting point, again, is Forex. Stocks are typically easier to trade, and you will typically look at a longer term time frame, daily charts, weekly charts, sometimes even monthly charts. So if you're the sort of trader, if you're a sort of investor, I should say, who just wants to check the charts once a month, then that's totally fine. There are systems out there for you to do that, and you can genuinely just check your portfolio every month and make different changes, rebalance it. Same for weekly trading. In fact, in terms of matching up technicals with the sort of fundamentals of a company and market news, weekly charts work very well with stocks. And then if you want to be a bit more reactive, maybe check in once a day. You could have an end of day system where you're checking the markets once a day and you trade the daily charts. So that's an option. If you want to be trading up and down, long and short, you want a bit more involvement, but you don't want to be sort of glued to your screen all day, then the 4-hour charts, the daily charts, these are going to allow you to swing trade, and that's the sort of zone that I fit into personally. I also do trade stocks on a weekly chart. And then the other final consideration is going to be how much money you can afford to lose if you were to start trading with your own money. I would recommend having a demo account purely to begin with for a week or two, just to understand how to use the platform, how to place a trade, how to set a stop loss, how to move a stop loss, how to set a take profit, remove a profit, do a market order, a limit order, use all the different indicators, have a fiddle around, get used to it, see what it looks like on your computer. Is it better on a bigger screen, smaller screen? Does it have a good support chat? Things like that. Use the demo account for that, but don't get used to trading in a demo account, because losing play money versus losing your actual funds make your decision making a completely different game. And then the final consideration is your strategy. Are you the sort of trader who prefers to have a higher win rate and take sort of small wins, shorter trades, or are you the kind of trader who's quite content to maybe lose 70% of the time and just win 30% of your trades, but when you win, you've let them run 5, 6, 20x what you were risking initially? You have to ask yourself those questions and really try and put yourself in the shoes of someone that is, off the back of 8 losing trades. How much are you going to risk? What are you comfortable with in terms of a drawdown if you were to lose 15 trades in a row? If that's quite a low threshold and you would be upset losing 5 trades in a row, maybe you need a system which has a higher win rate. I wouldn't recommend having a system which relies on a win rate less than 1-to-1, but there are certainly systems out there which have a closer to sort of 50-55% win rate where you can still have a positive trade return. So those would be the main considerations that I would sort of steer you towards to find your own perfect system. And then you really need to sort of commit to learning about it, experimenting with it, back testing it and understanding it. Try to figure out where the downsides are to your system, because every system has a downside. Please know that there's no perfect holy grail. System hopping will only introduce you to another imperfect system. You just got to understand that you will lose. It's a part of trading. You have to learn to love your losers, because it's just a part of doing it. You have to go through them in order to find that one big winning trade, which is going to sort of make up for those losses. So that was the one thing that completely transformed my trading. I hope that you will find that for yourselves as soon as possible. And if you have, or if you're still on the journey trying to do that, then please do comment below. Let me know a little bit about what you settled on or what your journey's been like to date. So if you found this video in any way useful, then please give that like button a hit. I would appreciate it very much, and I hope you'll want to subscribe and see more of my content, and I'll speak to you in another video. Thank you, traders. Good luck in the markets. Bye bye.